This episode of Profiles in Risk is sponsored by InsurTech Insights New York City, the largest InsurTech conference of the spring season. Join us on June 5th and 6th in New York City at the beautiful Javits Center as we dive into the future of insurance technology. Use discount code INERDS25 to save 25% on your ticket. See you in New York! Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, battling a cold and recording my second episode while battling this cold. Today I have with me Andrew Suesserman. I believe that I nailed that. Chief Revenue Officer at Affinity Advisors and fellow Atlantan like myself. I am looking out the window here in my beautiful ninth floor unit right on the Beltline, right next to Ponce City Market. In fact, Ponce is my view. And crappy weather today, like just kind of rainy and ugly.
Pretty terrible.
Hopefully, like myself, you didn't have to brave the outside today. So Andrew, thank you for coming on the show, first of all. We always give the guest a chance to give the elevator pitch. What is Affinity Advisors?
Yeah, definitely. Thanks, Tony. Appreciate it. And yes, agreed on the weather. I was putting a trampoline together for my kids yesterday, and that won't be happening today. So they're disappointed, but
Oh,
they'll have to do it tomorrow.
hold on. Yesterday wasn't rainy, but it was very, very windy.
It was. I was trying to
So,
control the trampoline. Yeah.
so yeah, like you gotta be careful. I gotta be careful. Those things fly
Yeah.
away pretty easily.
I know. They really do. Yeah. They tried to thankfully we're in a wooded area. But yeah, Tony, thank you for having me on. I appreciate it. It's great to be able to meet you and spend a little bit of time talking about Affinity Advisors and AA for short and what we're doing and why we're doing it. So by background, I was at Aon for 9 years and Marsh for about the last three. And Affinity Advisors is effectively a digital insurance platform where our clients, which are large distribution channels of small to middle market clients, so we could have retail insurance brokers, wholesale brokers, it could be associations. The common denominator between them is they work with a lot of small to middle market businesses, and they can use our platform, which is effectively an insurance marketplace, to be able to go on and very quickly rate, quote, and bind different types of insurance like cyber, directors and officers, employment practices, a lot of miscellaneous professional liability, and things of that nature.
Okay, perfect. Okay, so you are a recovering big brokerage broker, like big,
Yes.
like 8 years at Aon and 2.5 at Marsh. Uh, is Willis part of one of Aon nowadays? I can never keep track. No, Willis is WTC nowadays, right? So basically, you did two of the largest three. Uh,
Yes.
okay,
Yeah. Yeah.
so
So
you were just missing Willis for the trifecta of very, very large brokers.
yeah,
Uh,
I left Aon right after the whole Aon Willis merger collapsed. And that was really what created the opportunity to go to Marsh. So
oh, okay.
yeah.
Perfect. All right. And always Atlanta. Okay. So
Yeah,
so
always Atlanta.
so recovering broker, recovering big brokerage broker, uh, creating a or selling. And okay, this is a platform. Affinity Advisors is a digital insurance platform for large distribution channels of small and middle market clients. So wholesale brokers, associations, retail brokers. It's an insurance marketplace. All right.
That's right.
So, um, and specifically focused on professional liability side, management and professional liability. Did I get that right?
That's right. You
Okay.
did.
So you don't do the bold penguin thing and help me find coverage for like traditional insurance. It's or like PNC.
Correct. Not right now. We do have a lot of clients that are asking us about personal lines and employee benefits and core P&C like work comp, auto, GL. And really, we want to support our clients. We want to help them win.
Mhm.
We also know risk to the greatest risk to AA is the opportunity ahead of us. So we are trying to stay focused.
Okay, perfect, perfect. Um, so if I am a retail broker that does a whole bunch of small commercial, chances are, except for New Front, I was gonna say Next, but Next is a carrier. Chances are, except for New Front, small commercial is not really my focus, right? My focus is the bigger stuff, but I happen to bring in a lot of small commercial.
Yeah.
Why should I use the platform at Affinity Advisors?
Yeah, it's a good question. So I think there's a few answers to that. So the type of clients that we're working with, I mean, obviously we're working with distribution channels, like I said, that have a lot of small to middle market clients, and those clients would be the end policyholders. So it's really not just for small commercial. I mean, when I think middle market, it really could be any companies up to several hundred million in revenue up to a billion. And as you look at the specialty line space, the the amount of revenue that carriers are willing to go up to within their digital API has been increasing.
Excellent.
So, the whole point is to be able to give efficiency and education to these retailers and wholesalers and just help them do more really with less and do more with the existing employees and framework that they have currently so they can spend more time with building relationships, and maybe that's personally with their family and maybe it's professionally with different underwriters.
Okay. Okay. Um, so basically, a marketplace makes me think I enter the data once, and you give me a bunch of different options. So a bunch of different, a bunch of different options from a bunch of different carriers, and hopefully, uh, I can quote and bind
Yeah,
right then and there. Is that accurate for all carriers? Is that accurate for most?
it's
Uh,
accurate for most. I mean, one of the things we've been dealing with is trying to create consistency
mm,
in our platform around the customer experience because some carriers you can rate quote bind and do renewals and endorsements through that digital API. So really, through that technology channel, some carriers you can rate and quote, but they want you to leave and go into a different system to bind. So
mm,
every single carrier I'd say would kind of get, some get us to the 20-yard line, some get us to the 1 yard line, and we have to take that API, build it in, and create customization. So our clients aren't having to go and do five different things for five different carriers. And it is, the intent is to be able to return a true side by side comparison on these specialty lines, professional and management, like you said, to where you can evaluate these coverages all within the portal, all within one screen.
okay, and when you say a true comparison, what I'm hoping you mean is that we're comparing more than just price. That we're
Correct.
comparing coverages.
Absolutely.
Fantastic. Right. Uh,
Coverage, limits, sublimits, different insuring agreements, claims paying reputation. Of course, premium is a component of that, but we have looked at building in a few different algorithms so we can make recommendations based on the type of buyer that policyholder is.
Perfect. Perfect. Okay. So I started from the perspective of a retail agent, right? A retail broker. Uh, you've got a great graph on the website that shows me all 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, let's call it 9.
Yep.
Different types of organizations that you guys work with. So I kind of want to go one by one, but let's start with um what is the revenue model? Like who pays for the platform?
Yeah. It's a good question. A little bit of the secret sauce, but yeah, I mean, all in all, and where we'll be eventually is there will be a SaaS licensing fee, both from the insurance carriers and from our client, which our
Mhm,
client can be one of those 9 distribution channels. Where the clients we're working with the most and the ones that had initially asked for this early on based on my network were more of those retailers, wholesalers, and MGAs. There's
mhm.
some small insurance carriers that I've worked with in the past that asked for this, and I can explain kind of how I worked with them and my background,
Yeah.
which is a little different.
Mhm.
But right now, in order to bring carriers on the platform, in order to bring clients on, so we have the true distribution model, and so we can obtain the necessary data and really make an impact in the market. We're not trying to charge a significant upfront SaaS fee. The revenue model is really 2.5% of all premium that's bound in the portal. And that is not to take away from our clients' commissions. That is in addition to the commission that's being paid from the carrier. So it's really a 2.5% digital processing fee that's added onto the invoice, onto the overall cost, and passed to the end consumer or passed to the end insured, policyholder, client, whatever term you want to use.
Okay. Okay. So if I'm a wholesaler or a retail broker, this makes tons of sense, right? Just makes my life easier, basically,
Correct.
and the customer's paying for it ultimately. Uh, when you say associations,
Mhm.
what do we mean by associations?
Yeah, so you can have licensed association and you can have non-licensed associations, right? So the associations that we're having conversations with are the ones that same thing we spoke about before. They have a lot of small to middle market businesses that they work with. So it's not intended to be consumers or personal individuals at this point. And if it's a licensed association, so that could be like I mean, it technically could be like a risk retention group or even like a risk pool
Okay.
where maybe they have a captive or maybe they have a particular program offering work comp auto GL property inland marine, and they're going to use our platform to be able to offer the professional and management lines into that current distribution. If we have a traditional association, as you would think about a normal association, like, I mean, I'll just use one. What's the restaurant one? Is it I can't think of the name of the restaurant one right now. But even if it's like a national association for auto dealers, so
Okay.
like NADA is
Mhm.
another example. Um, it's going to bother me now. I can't think of the restaurant one, but so for example, they could have 20,000 auto dealers that they work with. And there's a lot of MGAs out there that have really good auto dealer programs for the P and C lines. What they don't have is the ability to offer in cyber and EPLI and crime and some of these other offerings. So we can partner with that association where they can bring those lines of coverage to the and auto dealers. We
Mhm.
also could partner with that MGA that's offering the core P and C lines to where they can enhance their distribution and some of their coverage offerings into their end client. So if it's a non-licensed entity, then we would be able to step into the mix as the licensed retail broker. But if we're ever working with any of our licensed clients, retailer or wholesaler, we're not acting as a broker. We're just acting as a digital intermediary because we don't want to take money out of their pocket. We just want to create efficiency in the
Perfect.
process.
Perfect. 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 All right. You can also partner with community banks, with technology firms, with PEOs. I'm going through those kind of quickly because those are not my listeners. Uh,
Yes.
I am curious on reinsurance brokers. So you have those.
Mhm.
So how would a reinsurance broker be interested in having access to the platform? Why?
Yeah. So the quick statistic on the MGA market, 'cause I think this is important. MGAs are effectively retail insurance brokers or some sort of broker that had a special niche in a coverage line or an industry. They got access to capacity or paper. They leased paper from, say, Zurich or AIG, and then now they're an MGA handling their own underwriting, their own claims handling. So, that's what an MGA is, or an MGU. That market has grown significantly over the past few years. So, there's now 800 different MGAs. It's equivalent to over 100 billion of gross written premiums. So we're talking about 10% of the global insurance market. And for the most part, those MGAs have specialty in an industry where they have the work comp, auto, GL, property, inland marine, kind of in that auto dealer example I just gave. It is very difficult and time consuming to go and have a client fill out a 10-page cyber application with the ransomware application, and then to go do a multi-week underwriting marketing process. And if you're a retailer and you don't want to do the marketing process, then you can go to a wholesaler, but you're going to lose commission to do it. So this just really depends on, um, for that MGA, why do they want to be able to create more stickiness with their client? Why would they want to be able to offer more lines? And really the answer is they provide it really just provides more arms and more of a relationship with their customer, and they get paid on top of it to do it. So back to your question of, well, so why reinsurance brokers? A lot of the clients that I've worked with over the past 10 years have been these MGAs, and they've gotten referred to me through the reinsurance broker. So when I was at Aon, it was a lot of work on the commercial risk side, partnering with Aon Re, Legacy Benfield. When I came over to Marsh, it was partnering a lot with Guy Carpenter, because these MGAs that are looking for capacity would come to the reinsurance broker and say, hey, here's our $20 million book. Can you help us find paper with a traditional insurance company or with a hybrid fronting carrier? There's a few different in the market. So they naturally would help them find paper. And as part of that paper requirement, that MGA has to go get E&O coverage, errors and omissions, professional liability. That's what I've spent my career doing, is brokering professional liability coverage for MGAs, or for small to middle market insurance companies, or for wholesale brokers. So it's more on the risk side of things. And then just through the natural conversation of how can we help them grow is when the digital platform and being able to offer more lines of coverage came into the picture. So the reinsurance brokers are definitely at the front end of the market, and they want to provide solutions that can help their clients grow. So whether it's Guy Carp or BMS or Lockton or Aon or Howden Tiger, all those different firms are very close with some of these different MGAs that want to be able to continue to own the market and provide better solutions and coverage lines to their clients. I know that was long-winded. Hopefully that helps though.
No, that was fantastic. That was. I am a former carrier guy. I'm a former carrier market underwriter. I'm a CPCU, an ARE, a bunch of other designations, and a middle market underwriter. I did a little bit of claims before, but the brokerage side, I know it only from the outside. I know it only as an underwriter, as a sales manager, as a recruiter. My girlfriend worked at one of the large brokers for a while, but this is the best explanation I've had on how the reinsurance brokers play into the whole thing. So thank you. And believe me,
Thank you.
Our listeners are generally gigantic insurance nerds. So there's a section of the listeners that really enjoyed this and learned a lot from it. So thank you.
Good.
I'm always curious about the origin story of the company. Okay. So I think of you guys as an insurtech. I'm assuming you think of an insurtech. Yet the name Affinity Advisors is a very conservative name, right? You didn't call this, random fruit name or random animal name or right, like you didn't go for like a fun millennial friendly name, nor for a fun millennial friendly website. So I'd love to hear the story. How did Affinity Advisors come to be? Clearly, it's made by insurance people for insurance people. How did it come?
Yeah, no, it's a good question. Thanks, Tony. So, I mean, initially it was like, affinity by nature is really around group purchasing, and how do we create a product offering that can bring different businesses together and purchase insurance in a smarter way. But then as we thought about well, what do we affinity for what? And when we think of an affinity now, we really think of an affinity for something. Like you either have an affinity for your family, you have an affinity for your clients, and what it came down to is like we have an affinity for our clients' growth. Period. Hard stop. We want to help our clients grow. We don't want to necessarily come in the name of disruption because we're working with retailers, we're working with wholesalers, we're wanting to work within the confines of the current relationships. So we really are trying to bring about peace and bring about growth. I mean, that's really what it is. Like, so I mean, happy to expand more on it, but I think simply put, we have an affinity for our clients' growth, to see them win, to help them grow, and for them to feel like we're on their side.
Perfect. 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 This has been super, super, super interesting. And you joined just a few months ago. How old is the company?
Yeah, so the company's been around since about 2022. And that was some, I'll give a little bit, you mentioned origin story before, so I'll just give a little bit of a flavor for that. So early 2023 was when my clients, my MGA clients, were asking, hey, you helped us with our corporate risk, you helped us with our E&O, can you help us with growth? And that could be MGA captives, different solutions for them to help take more risks so they can offer different products. But they were the ones that asked me about this digital platform. They were the ones that asked if this was available in the market. So as I started looking and understanding more about digital platforms and digital intermediaries and comparative raters, and looking internally within our own, Marsh team at the time, but also looking externally at some of the different competitors that were in the space. Some are digital wholesalers, some are just true back end raters that have the API connections. That's how I initially got connected with Affinity Advisors, and really selected them to be, really to be the back end, the digital technology partner for the solution that I was trying to build within Marsh. And thankfully I left Marsh on good terms, so no hard feelings there. But it was the right time to really bring this solution to my clients in a bigger way, and not to run into some of the roadblocks that I was experiencing.
All right. Very, very, very cool stuff. Uh, Great. Yeah, it's been great. I can't wait to have you guys back on the podcast in a year or two to really talk about how like the effect it's having, right? So it's been around for a couple of years. When did the platform actually launch? Like actual production, so to speak.
Yeah. Main production probably launched very early, 20, or probably late 2022. Early 2023 is when I became aware of it. And a lot of the platforms in the space have really been around for the last 2 years. So you do have, like you mentioned, Bull Penguin and Tarmika, and there's a few other like Coterie that have been out there that have done a few different things in the digital insurance space. But in terms of focusing on specialty lines, it's a new space. So there's really not a whole lot to go off of. And but what I love about it is it's not just about data and technology. All that matters, but it's really still all about relationships. So we're taking an old antiquated industry, yeah, and we're keeping the relationships, we're keeping
And
like the loyalty of it.
and you're taking a specialty side of an
Yeah.
antiquated industry, right? If there's something I've learned in insurance, is the more mainstream, the quicker we actually modernize it, right? So
Yeah.
auto, the first thing to get modernized. Directors and officers, last thing to get modernized, right?
Yeah.
So you're modernizing a esoteric specialty side of insurance that uh, it just runs slower than the rest of already slow
Yeah.
insurance.
Yes. Yeah. Well put.
Yeah, super, super, super interesting. Yeah, look forward to have you back in the show later. Um, so we are recording in March 2024. This episode will probably go live middle of April.
Yeah.
any conferences where you are pretty sure you guys will be at for anybody that wants to meet the team in person?
Yes, absolutely. So we will 100% be at the mid-year Target Markets event. Target Markets, a big intermediary conference where there will be MGAs, program administrators, different insurance carriers, reinsurance brokers, and that will be in Tampa, Florida, which is taking place May Sunday, May 12th, typically till Tuesday the 14th or Wednesday the 15th, and that's in Tampa, Florida, Target Markets.
Fantastic. So you're very much at the point. It's interesting how even the conferences that you go to tell me things about you guys, right? So you're at the point where the stuff is built, it's live. You're trying to sell it to the client, rather than we're going to a bunch of insurtech conferences because we're still building this thing.
Yeah, no, it's definitely, thanks for saying that. Yeah, it's definitely built. We're on version 2.0 of our product offering. We're bringing on more and more carriers every week and even more clients to be able to match up those carriers. And I could pull up and show you our side by side platform right now if you wanted to see it.
Uh, Go ahead. Yeah,
You want to
absolutely.
see it?
You're definitely welcome to do that.
There we go. Let me see if I can. You see this up? This, it's fine. I'm not sure if you see that bar here at the top, but I mean, so this is effectively the initial screen in our current platform, where you know our kind of minimum viable product version 1.0 is more driven at a quote level, where clients could come in here and they could just create a quote every single time, but it wasn't driven at a policyholder level, which is what you see here, to where it's almost like a mini CRM system for our retailers and our wholesalers or MGAs, so they can see, what were the quotes produced in the past, even if we're a few years out from now, which quotes were bound, why were they bound, so on and so forth. So I'm going to run really quickly through what this looks like. Keep in mind, this is our demo environment. It shows cyber liability only for the side by side. And a lot of what it doesn't show is it's not going to show the back end experience where if some of our larger retailer and wholesale clients, if they have their own platform and they want our back end to plug into their platform to provide the market access that we have, we're not going to be able to show that in this environment because that's so customized. But this will just show for the clients that are using our platform as another rating tool. That's what this experience will show. So, if you were a client and it was, Tony brokerage, you could come in here and create policy holders. So, let's say you work with a broker and they work with, Tony Corp and it's in the insurance agency space. You come in here, pull the industry code that you would want, you'd build the profile, so on and so forth for purposes of this. Oh, there we go. For purpose of this, I'm going to go back and just show you a current quote. So you'd go here, here's the built out policyholder, the prior quotes. You'd come in here, new quote. Like I said, right now, we're just showing cyber. There's a few mock markets that we have here. And you really would just go and, as the broker, you'd say, my client wants $1 million limit, 5K deductible. We'll go with a 3/29 effective date. They haven't had claims. um, what we've done, and I'll just run through this. What we've done now is instead of having a long list like this, it's really just few boxes side by side that show loss experience, exposure information, security controls. If it's tied to cyber, if it's D&O and EPLI that you've selected as a coverage, we'll move to the next screen. You pretty much would go here, you hit next, and this is where it pulls in. It's pinging off the APIs at that point, and it pulls in the side-by-side comparison that you want to see with the limits, with the premium, surplus lines, taxes, and fees if it's non-admitted. And then this is where you'll see the Affinity Advisors technology fee. You could pull the documents right here for the application, the proposal, could bind right here in the platform,
And I,
and
I should have asked
that's
before.
really it.
Normally I would have asked which carriers are you working with, but how many carriers are on the platform?
Yeah, so right now we're working with Cowbell, Tokyo Marine, Coalition, Beasley, and there's a few others that we're actively integrating with
Awesome.
right
So
now
so so
across multiple lines. So
from you going through the thing, uh, one thing that I immediately noticed is this is not just insure tech, easy to integrate into carriers. You've got more traditional carriers there. Uh, I should have asked this earlier, but if I'm a carrier, and I mean a traditional carrier that does this type of line,
yes.
what does the integration look like? If we want to get on the platform, how painful is it going to be to get on there?
So it's really as painful as the carrier wants it to be. So for the carriers that are coming on our platform right now, they have, I mean, I'm sure you're familiar with an API. I'll give a shout out to my friend Kristen from Beasley, because she explained it to me in a really good way, and I use this every time. But you pull up to the bank in the old school days, you put your money in, it sucks it up into a tube and takes it to the bank. That is an API just in tech form. So the carriers that we're working with today have their different coverage lines, their different products, and the underwriting appetite built into an API that's already built out. We're taking that API and we're coding it into our system. So if a carrier is digitally enabled, it's very easy. I mean, we could get with our development team onshore and offshore, we're getting that done within 7 to 10 days, which is very fast. Um, so we're looking to bring on more carriers. We're looking to expand into different coverage lines, like we spoke about before. For the more traditional carriers that are not digitally enabled and they still want to do the manual underwriting process, we can help them get there. We can help build their process into our system. It's just going to take a little bit longer, and it's up to them of how agile are they to be able to allow us to do that.
All right, fantastic. Thank you so much for your time today. I feel like we were a little unstructured today in the way we went about it, at least a little more disorganized than normal. I'll blame it on my cold. But yeah, awesome to chat with you today. Love what you guys are doing. As far as I've seen, nobody else is doing it in the specialty area that you're doing it in. So I'm glad somebody's doing it. Look forward to continue chatting with you as you continue to grow. Thank you so much for your time today.
Tony, thank you very much. We appreciate it.